Now I can welcome Dr. Christian Thun from European DataWarehouse with a talk on the treasure trove of credit data, managing risk through the European Data Warehouse. Dr. Thun is the CEO of European Data Warehouse, the first securitization data repository in the world, and has joined EDW as its managing director in 2016. Before joining EDW, he held senior positions with Moody Analytics as well as in consulting and structured finance in Frankfurt and London.
Super, thank you very much. So welcome. Fantastic presentation we've just heard. So as you see, I'm alone on stage, and if you look up the agenda, I actually had a co-speaker, Dr. Edeltraud Leibrock from Publicis Sapient, who unfortunately is off sick, so she sends her regards and apologizes for not being here today. So I feel a little bit like, kind of waiting for my date, but the lady of the night doesn't show up. So, okay. We have to do it without them. So what I want to talk to you about is loan level data and the availability of data in the European Data Warehouse. And a bit of, because I don't have the slides, because Edeltraud had the slides, so I'm a little bit basically high and dry. So allow me that I tell you a story instead to illustrate why the data that we've been collecting at European Data Warehouse is so tremendously valuable and the role that Sapient at that point in time played. Many of you remember the great financial crisis, 2007, 2008, 2009, and the collapse of the European ABS market. Who's familiar with securitisations, by the way? How they work, what they do, what ABS do. So if you are a bank and you have a loan portfolio, that's great. All these people pay their monthly installments, so you get the money back. But you want to lend more. So what do? You issue a bond and you use the portfolio and the income of the loan portfolio that you have available actually kind of as the source for income to pay the bond. So you get new money, so you actually create a new loan portfolio that then in turn will create new interest and principal payments. The information that, and this was something that was excessively used during the early 2000s in the United States. We all remember the terms like subprime loans and subprime mortgages, where these loans were given to people that actually they couldn't afford these things. And eventually, these loans were used as collateral for so-called asset-backed securities, and the asset-backed securities, the bonds, were then usually sold to German Landesbanken, who didn't really have a lot of insights and knowledge about what they were buying. In the end, actually, we saw what happened in 2009, 2008, 2009 with Lehman and all the other banks that disappeared from this planet. The problem was that also European securitizations, who were much safer, and we didn't have subprime loans in Europe, were also being dragged down by this development. And the ECB stepped in and said, we want to save this market. We want to make sure that banks can still lend. But we believe that a key part of that mission is transparency. So what we want is, that the banks submit information on those portfolios that they securitize, on every single loan they securitize. And these are millions of loans that are being securitized. And we want this to be stored in one big data warehouse, and this happened in 2011, in 2012. We want that by beginning of 2013, the whole infrastructure is available and everybody in Europe or the world can access the data. So we want the data loaded into the system, and we want an interface that everybody on this planet can access the data and download the files and check the data. And we actually want somebody to do this for us. In the end, it turned out to be Sapient, and you have 3 to 6 months to get it done, or else. So everything basically had to be done, and Sapient was in that position back in 2011, 2012, to embed and implement and basically build this infrastructure that didn't exist on the planet and still only exists a single time on this planet in Frankfurt. It's called the European Data Warehouse. There's similar attempts by the Bank of England, the Reserve Bank of Australia, or the Reserve Bank of New Zealand, but that is something different. Nobody has a data warehouse the way that European Data Warehouse has been set up. So we started in 2013, almost 10 years ago, and we collected loan level data. Banks that had securitized their portfolios had to submit this information because, of course, the ECB and other central banks demanded the data. And this data that had to be submitted comprised around 50 to 60 positions for every single loan, whether an auto loan, a mortgage, an SME loan, a credit card, a commercial consumer loan, the postcode, the type of the car, the income, the age of the borrower. So, and we at EDW, with the help of Sapient, maintaining that infrastructure, have collected for the last 10 years that data. So by now, we have data on more than 100 million loans from Europe, and they're updated monthly. So 100 million times 12, over 10 years, times 50 to 60 items. These are hundreds of billions of data points. I know what your neighbors make. I know when they were born. I know what they paid for their car, what they really paid for their car. I know how long they have to pay their mortgage. Every data is available at European DataWarehouse. And that is an enormous data treasure that we at European DataWarehouse, for the European market and for the European investors, have available, because the data is available for free. Every institutional investor can download terabytes and terabytes of data. So what's the typical answer I get in Germany? GDPR, DSGVO, oh my God. What's the typical answer I get outside Europe? What an opportunity. Jesus, what insight. Technology is meaningless. It just evolves on its own. Data, insights, knowledge, that's what counts. There's enormous insights, enormous data that is available at the fingertips. And as European DataWarehouse, because we are in this de facto monopoly position, when we were created, we are a normal private GmbH, but we have de facto a public sector mandate. That's why we have a very strict governance. We're not allowed to exploit our data and our unique position. Our pricing is a utility-based pricing. So we all basically have to give it away as a Selbstkostenpreis. So it's very cheap. I worked for Moody's Analytics, as you've heard. When I joined EDW, the first thing I wanted to change was the price list. Add a 0 everywhere or 2 zeros, just to get to some market prices, but I'm not allowed to. So data is dirt cheap. What do Europeans say and Germans? GDPR, confidentiality. What do Americans say? They start to laugh. At multiple events where I spoke with Americans, Anglo-Saxon data scientists, and they couldn't believe their luck. So 60% or more of our user base are American and Anglo-Saxon, because they use the data. And I used to work for an American company, so I understand how they think. So they take the data, build advanced credit risk models, go back to European banks and say, here is a model, $100,000 a month. And the bank says, wow, awesome. On what data have you built it? Oh, well, on yours. Oh, okay. That is the level of backward thinking that I experience every day in Europe. In Europe, they want to sue me. In America, they want to sue me. I can't believe their luck that actually Europeans give away our data for almost nothing. And just to illustrate some of the insights that we have, again, we're not allowed to do analytics. Again, we're just here to collect the data, clean the data, make sure we work with the data. If the data is of insufficient quality, we have to send it back. We have to say to the bank, unfortunately, you do not comply with regulation, you do not comply with the standards of the ECB, they will not accept your paper as collateral. So you do not get the money that you need. So banks have an intrinsic, very, very clear motivation and incentive to submit good data because their funding depends on it. So we have collected, as I said, hundreds of millions of data points, all these mortgages and loans and cars. And just to illustrate a little bit what could be done with it, for example, is, let's check your bias, for example. We did this, basically, we checked about 800,000 cars in Hessen, for example, where we're located. And we checked defaults risk or delinquency risk. So what's the safest car that you can fund? If somebody comes to you and says, I want to buy this car, give me a loan, what is the safest car? What does your gut feel tell you? What brand comes up? Nope. No, Volvo, okay. Ford Fiesta. Okay? What is the riskiest one? Somebody comes to you and said, I want to basically, give me a loan, I want to buy this car. Huh?
It's an SUV, I guess.
It's not an SUV, no. It's an SUV, but it's got so what do you think? Is it Porsche? Who thinks it's Porsche? Who thinks it's Audi? Kind of. No, it's not BMW. BMW is actually pretty boring, like Mercedes. They're just somewhere in the middle. Audi Q7 first generation. By far the worst. So for the last almost 10 years, every quarter, it's among the top 3. So if you see actually a car running around in Frankfurt or somewhere in Hessen, an Audi Q7 old model, it's very likely actually kind of that the owner or the driver can't pay the monthly rents or monthly installments. Other thing, imagine you're a banker and you want to offer a new mortgage to Dutch customers. As you might know, the Dutch mortgages, they usually have very high loan-to-values, kind of up to 100%. And so they're very boring. And we looked at the data, we looked at the normal, let's say, term of these mortgages that they have in the Netherlands, of generation of the baby boomers as well as Generation Y, so the first-time buyers. The baby boomers had very long mortgages, about 30 years. So what about their children? What term do they want? Do they want to be like the French, 10 years? A little more agile, shorter term of the loan, mortgages, just to... How would you actually kind of design a product? And we had that question actually coming especially from challenger banks in the UK, like Atom Bank and others, just basically want to learn what's going on in these markets, how they have to tailor-make a product that fits the needs. They're even more boring than their parents. They want 40 years. So even more conservative. So forget about agility and all that modern stuff. No, they're pretty boring. They're really boring. So, I mean, maybe, okay, they want to lock in kind of these very, very low interest rates that we've seen the last couple of years, but it's just amazing that what you can have and what you see in these portfolios. Other things, kind of, because we hear this kind of all day long, kind of, that green is good. If you have a green house, for example, a green meaning an energy efficient house with an A grade, an EPC energy performance certificate. So the kilowatt hours that by square meters that is being used, and you have houses that are A or B or F, not so good. Which one performs better over time? The A-B grades, okay? So I told this story actually kind of to someone in Brussels, and they cheered and said, fantastic, kind of green is good, kind of because they're green they perform better. Nonsense. Correlation has nothing to do with causality. So why do these loans perform better than the F ones, the not so energy efficient houses? Because they're newer. Also, yeah, but the F ones. Is it kind of the reason why they actually kind of do we see more defaults and more delinquencies in F-rated houses compared to B-rated houses? They have more what? Exactly, yeah, they have more pools. Exactly, and the sauna and the wellness and the spa. Kind of. It's the income of the households. On average, poorer households live in less energy efficient houses. The richer 10% live in the A and B houses. So when we now actually kind of face high energy costs, and this is actually a project we're working on, a stress test for a bank, kind of assessing their mortgage book, energy efficiency becomes a stress factor because you are actually kind of in a less affluent household facing higher energy bills that is higher because your house is less energy efficient. So it's a double whammy that you're facing. Whereas if you have a lot of these A and B graded houses of very rich people who live actually kind of in an urban environment, because you find more A and B grade houses in urban environments, they are less affected. So if you actually do a stress test, you can look at things like energy efficiency and take energy efficiency into your stress consideration, which again basically kind of offers a new insight that wasn't available before. And you can not only do this in Germany, you can also do this in France, or you can do this in Spain. You can also look at other things, for example. If you look at, let's take basically cars. And that's basically kind of also, you have to also, everything that comes out of Europe, comes out of Brussels, you always have to be a bit careful. Because EPCs, as you know, are not harmonized. So if actually you buy a pool, say your boss tells you invest in a green auto ABS. So what do? Oh, you buy a BMW or ABS, fantastic, very good. Because all the cars are green. And you look at that basically and then somebody, a journalist, whoever, activist, looks deeper and you say wait a moment, you finance a lot of SUVs because SUVs, Land Rovers, are green in Germany. You do the same in France and you basically fund a lot of Fiat Cinquecentos. Fiat Cinquecentos are green in France but brown in Germany, and Land Rovers are green here and brown in France. How can that be? Well, very simple, because the French only measure the actual emission of carbon dioxide, where the Germans factor that in the weight of the car. So if you have to burn fossil fuels, at least do something with it. So if you can move a 2.5-ton SUV and you have a very efficient car, wow, what does it say about the engine of the Fiat? Okay, so again, huge insights that you can basically factor in your decision of how actually you build these models and what you can do. So it's enormous wealth of information that you have. And again, Europeans typically are afraid of data. And as I said, the usual question is GDPR, data confidentiality. That has been vetted 10 years ago by the ECB and the national central banks against 27 confidentiality rules and regulations that were in place back in 2011, 2012, in a GDPR compliance, so we ticked that box long ago. But still, North Americans, Anglo-Saxons embrace the data that we give away for free. And we don't use that data. So while there is so much opportunity to actually use the data and actually build new products, loan products basically for banks to grow, for challenger banks, for investors to actually better understand where they put their money, to stress their portfolios, all this information actually is available. Or to forecast. How will actually did COVID actually have an impact on the banks' P&Ls? No. If you look at the mortgage books or the loan books of banks across Europe, it is as COVID hasn't happened. Hardly any really credit losses across all the countries. Why? Because they actually did a lot of payment holidays measures. So in the UK, every 5th mortgage benefited from some kind of payment holiday. Excessive use of that instrument, but it helped. The UK actually went back in 2021 to normal and people resumed their payments. Other countries like Spain and Italy took a bit longer, but also came back. So that's what actually what we see here. But now actually we are in the situation where we're coming out of COVID, we have the Ukraine war, we have the energy crisis, we have inflation. And if you look, for example, at the UK, and I was there at London speaking at a similar conference there, and you have inflation at 13% by the end of the year or more. You have interest rates that go through the roof. And you have your mortgages, which basically run out of your fixed income period because they're only locked in for 2 years, not like 10 or 15 years as we have it here. So next year you pay 4 times as much for your mortgage, and you pay 4 times as much for your energy, and you pay 15% more for your cost of living. What do you do if you're a bank? Do you wait and let it happen? Or do you say, wait a moment, can I tap into some information? That I know that these things have materialized. I know that this is basically there at the horizon, eventually will hit me. But are there other ways? And yes, there are. We looked at 5 million, 6 million credit cards, and what you see that in the second quarter alone, the number of people who maxed out their credit cards has doubled. Still very low numbers, but still has doubled. It's rocket. So people are using their credit cards. Everything that's under the radar. And this will get worse. And I think if we do the same analysis here, we probably will see exactly the same results. So having the data, as I said, technology is just a tool. The data has the insight. So if somebody comes to you and tells you, I can tell you where you will be hit next year, what you have to do, because I have insights and I can read the science that you so kindly provide to me for free. Oh, would you be willing to pay $50,000 or $100,000? You probably would, because otherwise actually you're losing millions. Whenever I see this, it really annoys me that actually we as Europeans don't get our act together and we can't do it ourselves. So you can actually apply artificial intelligence. I had one case where a European company came to us and said, we apply artificial intelligence to your data, and we want to actually understand house prices. And we look at it. And they came to us 2 months later with a stunning result that house prices in London are the highest. Wow, I could have told you that in 3 minutes. So, that type of nonsense must stop. The data is available. I often hear when I'm on the road with Edeltraud, and we talk about basically kind of how Sapient can help banks to kind of get it together and do things. So how actually kind of, and always it's like, no, the data isn't available. We have to wait. No, data is available. We have on energy performance, basically we heard about earlier today from NVIDIA, this topic about ESG, that the data is not available, you have to use proxies. Yes, but there are also 2.5 million cars where actually you have the EPC at your fingertip for free. Don't forget that. Institutional investors get it for free, others get it dirt cheap. And that information then basically puts you in a position actually to act better and to actually have better risk management, have better foresight and better information, and potentially actually make sort of money. And this is blink. So, okay. Okay. Anybody has seen The Big Short? Yay. Wow, perfect. Okay, so you know what I'm talking about. Fantastic. For those of you who haven't seen it, watch it. And there is one scene where Christian Bale, as he starring as Michael Berry, is checking an Excel file of loans, of mortgages, and it says defaulted, 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 defaulted. Just basically that is the type of data we collect. Okay? And people casually ignored it back then. How much money, how much profit did he make for his investors? $489 million. Because he knew things that was available to everybody else, but he was smart enough to look a little bit deeper. So that is the beauty of this treasure trove European data warehouse, which was created for this purpose, to bring transparency to the market and help others to actually develop new tools. As I said, we're not allowed to. We just collect the data. There are great companies that do fantastic, magical things with our data, but they're not located here, on the other side of the ocean. So thank you very much.
Thank you very much.